Traders, welcome back guys to the channel where I'm going to be taking everyday trading topics and breaking them down nice and easy for you so that you can understand them and digest them and implement them for yourself on your own chart. So today I'm going to be touching on a beginner level topic, and that is something called the top-down analysis. The top-down analysis is something that traders from every walk of life, whether you're beginner, intermediate, expert, it's a way of traders basically zooming out on their charts, getting the bigger picture of the whole market so that it gives them a lot more quality and laser focus on the small entries on the intraday. So you can see right now I'm on the 1 minute. It's a way of us zooming out on the higher time frame, finding the different levels, finding the overall market sentiment, and basically zooming back in so that it gives us much more quality over entries. As a trader, you realize over time, I've been doing this for 10 years now, that it's not about how many trades you get throughout the day, it's how many good quality trades you get throughout the day. The trades that you get throughout the day might be anywhere from 50 to 100 or whatever. The quality ones can be 1, 2, 3. For me, I usually aim for around 3 trades a day. For you, obviously, it's entirely your call as well. So the way that we start a top-down analysis is we need to understand the principles of support and resistance. Now, support and resistance, if you don't know, is where we find key levels in the market where price has responded to historically. So we're on the 1 minute chart right now. And you can see it's basically just a way of us seeing where price has responded to previously. So for example, this is a level right here. Why? Because price responded here, 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 here. It's basically showing us that price responds to the same point continuously over and over again. Now, because we're on the smaller time frame, it's not going to be as reliable. The bigger the time frame is, the more reliable the key level you're going to find. And if you identify a big key level on like a monthly chart or something like that, if you then zoom into the 1 minute chart and you can see you're approaching it, it's a much more significant level. It means that you're going to get a bigger reaction and be able to produce a much better, bigger trade out of it as well. Now, support and resistance is of course relative to the time zone that you're on. So from what we can see right here, we've got all these touch points, but when we zoom out to a bigger chart, it's going to be showing us every candle as like a monthly or a daily, something like that. So you're not going to see the same level. So that's why it's super, super important. Support and resistance is the main fundamental. It's the cornerstone of every trade that I place. So yeah, it really is something. By doing this, your top-down analysis is going to give you a lot more patience and a lot more discipline, and it's going to teach you some really good habits for your trading journey. So let me just get rid of this right now. And yeah, and by the way, you can do these all over the place. I was just showing you one example here. But yeah, first of all, we want to start on the monthly chart. So we're going to zoom all the way out to the monthly chart. And once we're on the monthly chart, it basically just means that every single one of these candles now represents 1 month. Before it represented 1 minute, now every single one of these represents 1 month. And you can see I've marked out a few on here already for you guys. And you're going to find that when you're on something like a normal currency pairing, like the pound dollar, for example, you're going to see that price actually over time, over months, it ranges up and down, but it comes back to like a middle range. But with something like gold, which is what I trade, it is an asset, it's not a currency. So essentially it's a rare precious metal, it has tangible value, and there's a limited supply of it in the world, which means that its value continuously goes up. If we go back to the dawn of time, you can see price has consistently risen since then. Why is that? Again, it's because it's something that has real value and there is a limited supply of it in the world. Something like the pound, the dollar, these are fiat currencies. They don't hold any real value, meaning that you can print as much of it as you want. It's not backed up by anything tangible. Something like gold is something that investors run to during times of crisis. It's a safe haven asset, meaning that when the economy's in the shitter, people rush to this because it holds its value well, and currencies tend to fall apart. So that's why you see, you know, the value of your pound and your dollar getting worse and worse over time, whereas you see the value of gold continuously going up. So this isn't the best example to use because obviously you are going to see more ranging on most other currency pairings, whereas with gold, you know, the levels that you mark up for months ago, like all the way back here, they're not going to be relevant because it's super, super unlikely that price on gold is ever really going to come back down to that level. So I'm going to show you the full process anyway, because if you do trade other currency pairs, it's still going to be super, super useful for you to check out in the future. And yeah, I want it to be relevant for all currency pairings, not just the ones that I trade as well. So straight away we can see like price has responded to this level right here 3 times. You can see as well, yeah, you want to mark up your higher highs and your higher lows. Again, it's not massively relevant on gold because something crazy would have to happen for it to get back here, but you just want to mark out where price has responded to historically. So right here is another one. Another important thing to mention, guys, is that I'm marking these up as if they are completely straight line, when in fact they're not. These are not levels of resistance, these are areas of resistance or support. These are areas of interest, meaning that it's not going to be a complete line, it's actually going to be more like this. And the reason that this is important for you guys to know is that if you're dealing with a straight line and your price is going up and up and up and up and up, and then it gets to there and it stops and then comes back down, you might have said to yourself, oh well, I didn't take the trade because it never actually reached the resistance line. Whereas when it's an area, you're giving yourself a lot more guesswork, a lot less guesswork to play with. So basically when you're entering a level, it doesn't have to touch the line completely, it can be somewhere in the middle, and you know that that's your area of interest. So that's where you're looking for your other confluences to actually enter the trade. So I've marked this out as a line on here, but in the future I'll do it as a box or a rectangle for you. So yeah, once we've marked out these levels, we can then zoom in onto a smaller time frame. And again, like I said, if we mark out one of these levels and then we zoom in on the 1 minute, and then for whatever reason it's back down here again and we're about to touch one of the monthly key levels, we know that is a huge level. It's a very significant level. Why? Because look how far it's gone back where it's still responding to the same place. Months and months and months and months, years even. This is from March 2012. And you can see we responded here, here, and we've also responded to it here as well. So very, very significant. So the next thing that we do after marking out our monthly key levels is we zoom into our weekly. So we'll look at the weekly now. Zoom into the weekly, and then all of a sudden we can start to see new levels presenting themselves. So now we can take our rectangle tool and we can mark out the same levels. Again, you can do this, if you're on other currency pairings, go back and do this all the way back. But for us, we know price isn't going to be back down here again, so I'm going to keep this relevant and I'm going to keep it tight. So we can see price responding to this level right here. You can see price responding to this level right here. See price responding to this level right here. And of course, we want to mark out our higher highs as well. So we can also see, already got this one marked up, I'm going to do it again anyway. We can also see price responding to this level right here as well. So once we've done that, we can do it again. You can go down to the weekly, or if you it's good to do like 4 or 5, I guess, something like that. So we can go down to the weekly, we can see it, and you'll start to see different levels present themselves the more we scrutinize the chart. Oh, we're on the weekly, sorry, I mean the daily. So we'll go down to the daily next. Once we're down here on the daily chart, you can see different levels are presenting themselves again. So we'll change the color on this one, but we can see price responding to these levels right here. Make this like a blue or something. You can see price responding to this level right here. Why? 1 touch, 2 touch, 3 touch, responding to the level the whole way through. Again for this one right here. And so on and so forth. And now once we've done the daily, we can go down to the 4 hourly. Again, we're going to scrutinize it even further. We're going to find even more key levels for us to respond to. Change color again. So we can start to actually, to be fair, we can actually start to just kind of move these in a little bit more and make them a little bit more accurate. So this would now become one level. This one here is a completely separate level. And of course, change the colors again. Got to do it. Actually, colorblind, guys, so this isn't the easiest thing for me to do to remember, but I can kind of make it out. And yeah, you kind of get the picture. And if you zoom in even more, you can start to see other little ones throughout the day. You see, so this would also be another level right here. If it's getting a bit too messy for you, you can actually just use your line tool like this, for example. I'm going to show you a very quick fix for this at the end. Like I said, this is really useful for you guys to fully scrutinize. It's going to teach you the patience and discipline really, really needed. But saying that, I've been trading for 10 years now, and marking up these charts, it can be a little bit tedious, so it is good to do it at the click of a button. I've got an indicator for you which is going to do it all for you. Now once you've done this, guys, you can scrutinize it even further. You go down to the 1 hourly, the whatever, 30 minutes. Do this as much as you want. Obviously try and keep it clean, and you don't want it to be too time consuming. I personally stick to the major ones. If I'm on gold, I'll just literally do the daily and I'll go down from there. If I'm trading another currency pairing, it's very useful to have your monthly, your weekly, your daily. You got to remember as well, the monthly ones, the weekly ones, they're not ones that you need to do all the time. You don't need to be doing these every day. The intraday are every day. The other ones you can kind of monitor every single week or every single other week, something like that. So I'm just going to jump straight back in on the 1 minute. And what we should see is some of our more significant levels actually presenting themselves, which is exactly what we can see right here. Now, once you are on the daily, again, like I said, you can actually scrutinize it even further. And for the daily intraday, I would use lines, and that's where we can take levels like this. Responded once, twice, 3 times, 4 times, 5 times, 6 times. It's definitely a good level, a good intraday level, and you can kind of continue to do this the whole way through and just find where price has responded to previously. Here, 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 1, 2, 3, 4, 5. So you kind of get the picture. And remember, we're talking about areas, and I'm putting lines because it's getting a little bit too messy, but you don't have to use lines. You can also use boxes. So how would we actually identify an entry? Okay, so what can we see on our screen right now? We can obviously see our intradays, but we can also see a more significant level right here. This was one of our weeklies, I believe. I forgot which color I labeled it as, where you can see that price has gone up and it's tested a weekly level. Now, what we can actually another thing to throw in as well, it's actually sometimes good to zoom in on zoom out on your charts and find out which way price is going. A lot of people like to trade with the trend, so another part of a top-down analysis would be to check let's just go to the daily, just so we can save some time. We take a big zoom out and we take a little look and we say, okay, which way is the trend going? And we can see it's in an uptrend. So a lot of people might be like, okay, I'm only going to place bullish trades. Then we can take it down to the weekly, down to the 4 hourly. We can see which direction the trend is moving on this. We zoom out, we can see we are in another uptrend right here. Kind of messed around a little bit here, but you can see we're getting higher highs again, higher lows, so we're back in an uptrend. And yeah, you can use that as a good indication as well. On this, might not have been, on this particular one that I'm going to show you, might not have been too relevant. But yeah, anyway, once we zoom back in, we've got our key levels. And intraday is great, but if you want to be trading quality over quantity, that's where you can wait for these real good opportunities, because what we can see right here is that price responded to one of our weekly key levels right here. So remember, guys, I only take 3 trades every single day. You don't need to be aiming for loads and loads of trades. It is definitely about the quality over the quantity. And you can see price came up, it tested twice, so we've responded to this really significant level right here, this really significant weekly key level. We've also got a double top pattern. That is a chart pattern, very, very good confluence. So even though we might have got a few smaller good trades here from like our intraday, if we'd have waited for it to touch on our weekly key level right here, we've got a fucking enormous entry right here. We've come back down, we've responded to some other levels, it's more wavered a bit, but this would have been an absolutely fantastic trade. We came back up, we tested our level again, we actually got a breakthrough at this point right here, but you can see we had to come back down, we had to retest. So this is a very significant level right here. So what we'd have actually done is not taken a lot of these smaller trades. We'd have waited for it to hit a significant key level. That's one confluence. We've got a double top pattern. We've tested the same level twice. That is another confluence that we could have gone through right here. If you want some added ones as well, we can look for, actually, to be fair, you can use the EMA, yeah, actually, that's a great one right there. So I use the crossover strategy sometimes. So we've got the EMA here and the SMA, EMA here and the SMA here. The SMA has crossed down over the EMA. That indicates that it's going to be a bearish move. So that's the third confluence. We can also chuck on one of my famous JETS indicators. This is the tailored indicator only for my group. And you can see there as well, we've had a short signal, that's number 4 confluence. If you want to add even more to this, we could go for an RSI. RSI, if you're not familiar, is an overbought, oversold indicator, and essentially this area right here between the 70 and the 30, that's our trade zone. When we're above or below, that's overbought or oversold, and what we wait for is the RSI to cross back into the trade zone. So you can see exactly the same point here as we retested the second time. We've come back down, we've crossed back into the trade zone, and that would have been a signal for a trade. We've also crossed down over the EMA that I use on my RSI. That is another confluence. So all of these different confluences are saying the same thing. They're all saying sell. So that's a nice little indication, guys, of how I might have used this. And the good thing to mention here as well is that nothing in trading is perfect on its own. You've got lots of different strategies, lots of different indicators, and people use these because they do work. They have success in them, but they're not perfect. And you know, the only reason that these things exist in the first place, otherwise why even bother creating something like the RSI if it wasn't useful? They're all useful, but on their own, they're average. They might give you like a 55% success rate, something like that. It's going to be a little bit more of a roll of the dice. You start compounding these together and using all these different confluences, support, resistance lines, big key levels, chart patterns like a double top, my indicator there, the RSI indicator, the EMA crossover strategy, all these different things. You then got 5-6 confluences all working together, all telling you to sell. And now all of a sudden it's not a 55% probability of success, it's like an 85% probability of success. So all of these things compound together and they make things super useful. Now guys, if you're someone who doesn't want to be doing this every single day, like I said, if you're a beginner, do it. It's going to teach you the right habits that you need to be a very, very good trader. But if you're someone who isn't really that interested in doing it, don't worry, I've got you covered. I have another JETS indicator, which is completely free in my group, by the way. That's my JETS support resistance indicator, where it literally sets everything up at a click of a button. And that's exactly what we can see right here. Now, there's a few different settings that you can have on this. If you double click it, you can see you can see the different thresholds for it. So our swing detection look back, this is basically telling us how long we're looking back candle wise in order to actually identify the support and resistance. We can set this to like a 5, for example, and it basically change the amount of entries that it's going to give us on there. The minimum distance level in pips, we've got the mitigation count. So basically what this does is it tells us how many candles have actually broken through this previously. So if it's mitigated more than 3 times, for example, it's not going to show it as a support and resistance. So by mitigated, I mean broken through. So if we have a support or resistance level that's been broken more than 3 times, it's not going to count it. You can have this on or off. Personally, I would take it off because some of these levels don't always get responded to, but they're still good to know where they are. Still going to give you a little bit of extra confluence on the actual trend. Extending lines forward, that's just basically once it's created a support or resistance level, it extends it forward all the way to the end, just so you can actually see where it is in the future in case you need it. And of course the number of levels to show, that's just how many different levels, support and resistance levels, it wants you to show on the chart. So if you want it to be less messy, you can put it as like 5, 10, or if you want it to be extra messy, you can put it as 100. And that's basically it. So these are all the different settings that you can use. Take a little screenshot of this as well if you want to use this for yourself. And yeah, it also gives you the mitigation count here. So we can see this one has been breached 0 times, this one has been breached 3 times, this one 0 times, this one 4 times. And it basically gives you a little indication on how reliable these are as actual support and resistance levels as well. So once you've got this on there, you can go back up to your monthly chart. Now this is specific to the time frame that you've got it on. So if we've got it on like a 1 month chart, for example, it's only going to show you the monthlies, but it's not going to stay on there when you put it down to like a daily chart again. So what you can actually do is you can just take your little line tool and you can just mark up the specific levels that you can see on the chart, on the monthly, so that when you do come back to this later on, it's still going to be on your chart. So for example, I know there's not one there now, but for example, if there was one here on the monthly, we could mark it up like that, so that when we do go back down to the 1 minute chart, we can still see them on there. And that's basically it in a nutshell, guys. Very, very useful for you guys to learn. It is an exceptionally good tool to use. It's a good process to use. It's going to really teach you the right things, and also it's going to help you really refine your entries and make sure you're getting them good quality entries rather than just kind of rolling the dice and just swinging wild at absolutely every entry you can find. And I would definitely highly recommend it if you want to go far in the trading game. Now guys, if you found this video nice and useful, for sure, drop a like, leave me a comment below. Did you enjoy this? Have you seen this before? Are there any things that you would add in terms of confluences or anything else to improve what I've done here? And share it with a friend as well if you found it useful. Also guys, if you're interested in any of the indicators I show you today, whether it's the support resistance one or my jets one, you can find all of these indicators completely for free inside my free group. If you check the description below, you're going to find the link to my free group. All you have to do is join, message support, and they'll give you these indicators and also 20 others completely for free, which will change up your trading game in the future. They are extremely useful, and like I said, it's completely free. Inside my group as well, there is a ton of free education. There is a live session every single week. We do a daily free trade in there as well, and there's also a completely free beginner's course that you guys can use as much as you want. Everything completely free, no strings attached. So yeah, check out the description below if you want to check it out. But anyway guys, thank you so much for watching. Thanks for the support. I hope you found this super useful. I hope I was able to explain it in a way that was quite beginner friendly as well. But yeah, I hope you enjoyed testing this out for yourself, and for sure let me know on the next one how you found it. Cheers guys.